Hello and welcome. I'm Tori Haney, the Marketing and Events Director at the Los Angeles Business Journal. It's an absolute honor to be here today moderating today's roundtable discussion, Recovery and Beyond, What Businesses Need to Know. In the aftermath of the most devastating wildfire season in Los Angeles history, businesses across the region are facing amorous challenges, navigating insurance claims, securing financial support, and planning for long-term resilience. Today, we're bringing together a panel of experts in law, finance, and insurance to help us understand the road to recovery and how businesses can prepare for the future. Throughout this discussion, we'll cover pressing questions about wildfire-related claims, insurance policy gaps, financial aid, and long-term strategies for resilience. But before we dive in, I'd like to say a special thank you to our sponsors, Cathay Bank, IMA, and Merlin Law Group. Thank you for not only joining us for this educational roundtable, but for all that you do for our community of business. All right, let's get started. I'd like to introduce today's speakers. First, Derek Chaikin, attorney, Merlin Law Group. Jeannie DeLaura, Executive Vice President of Commercial Alliance with IMA. And Kirk Malmrose, EVP, Director of Commercial Real Estate and Construction Lending with Cathay Bank. All right, this first question we're going to kick off for Jeannie. In the wake of the fires, what's something businesses should know now, both in the short term and the long term?
Great question. They should, and businesses, those who've been affected by the fires, they should have already reached out to their insurance broker, their insurance carriers for notification. But for now, I think planning and looking, if they haven't been affected by the fires, do we have a disaster recovery plan? What does that look like? How do we be ready for something like this unprecedented disaster that just happened about 6 weeks ago? I would say absolutely look at your insurance coverage, talk to your insurance broker, look at those limits and see, what you're covered for. So ask some of those good, questions of, do we need to change the limits? What's my deductible? Do I have business interruption insurance in place? Things like that.
Great, thank you. And as Jeannie just mentioned, insurance is obviously a major factor in the recovery process. So, Derek, what should insurance companies play in ensuring a smooth recovery?
So a lot of people depend on their insurance companies during this time to help them get back on their feet. There's a bunch of really special rules for homeowners and some for business owners as well that come into play that are recent laws as a result of the wildfires that we've had across the state over the last decade or so. For example, an insurance company, if you totally have a total loss of your home, has to pay you 4 months of fair rental value of your home for you to rent somewhere else without question. They can't play games with that money. They also have the obligation, if you lose everything, to pay you a percentage of your contents right away, so you can start rebuying stuff. So insurance companies have that obligation, of course, to reasonably investigate all aspects of a claim. And when a home's totally gone, it makes their job a little bit easier, of course. And then they need to follow the good faith and fair dealing laws of California to make sure that they're treating their clients fairly. One thing Jeannie said about look, the obligation though is on the business owner and the insured to make sure they have the coverages that they're paying for. There's no independent duty of your broker to make sure that they're doing something for you. You have to check your own policy and be responsible for yourself. And I think a lot of people are learning that as a result of this catastrophe, that it is their responsibility to understand the exact product they're paying for when they buy insurance.
That's such a great point, Derek. And I know internally as a team, that's something that we discussed pretty heavily early on, that it is your responsibility to know these things, and it's not going to happen unless you're advocating. So thanks for bringing that up. Kirk, financial institutions are also key players in rebuilding efforts. How can banks and lenders support businesses impacted by the wildfires?
I think there's a couple of really important aspects here. First is that homeowners, this is usually their largest asset. Their life is invested in their homes, as well as for business owners if they own their own property, or investors that own a property. This is the one of the largest assets that they even have. So I echo both Derek and Janine's comments that having adequate insurance is vitally important. I think that also that the financial community has a huge investment in this as well. Is that we want to be able to help those within our communities to be able to weather these sorts of storms. And one of the things, or a couple of things that we've been doing as a bank, is that we created a client assistance program, and it has certain components such as loan deferment plans for those that have been affected. We have special loan assistance workshops, how people might be able to navigate just financially what this can do to them. And then we also realize that every situation is unique, and that our bankers, and whether it's our bank or other banks, they really need to look at things on a case-by-case basis to see what's going to be able to provide the best assistance for those that have been impacted.
Great, thank you. And looking at the bigger picture, Jeannie, how would you describe the insurance landscape as we move forward and we're processing away as we get further away from the wildfires?
On the commercial side, and that's where I specialize in, business insurance. Initially, we've seen the insurance carriers and the insurance adjusters step up and be really responsive, provide initial funding for businesses that have been affected. And we are seeing, right now the insurance companies are working as fast as they can. The toughest thing is the businesses, as they're sending in their financial data to show their losses, it takes time to review, right? Unfortunately, our businesses are saying, we need money, we need some funds to come back, while we're going through this. But the insurance companies are working as hard as they can. Our role as the broker is to be the client's advocate. Should there be a potential nuance to that policy that potentially could or couldn't cover something, we will definitely advocate for our client to find some potential gray areas to pick up some of those costs while they're down. I will say it's really too soon, since we're again about 6 weeks out from these fires, to really know how the insurance world is going to be affected, especially in California. I think we all know that it's been a really tough marketplace, especially for property, whether you're a homeowner or a business owner, the last several years. We just don't know how this will affect. We do know it's been devastating for the homeowners, for the business owners, and for the insurance world, but it's really too soon to see. So we're talking with all of our insurance carriers on a monthly basis, and hearing from them the numbers that they're thinking that these will come out to be for total losses, and what they'll be paying out. But yet we're just not sure yet. So more to come.
Great, thank you. And as you just mentioned, it takes a lot of time to review, and many businesses only realize gaps in their insurance coverage after the disaster already strikes. So, Derek, what are some common gaps in commercial policies that businesses often overlook when it comes to disaster-related damages?
I think right away, most people realize that they may have only paid for liability coverage on their policy, meaning they're only covered if someone makes a claim against that business itself, rather than have protection for the business's personal property or contents, which is really a big gap that people have. People are finding out, hey, my inventory was burned down, but I only had liability coverage. And it happens a lot for people that are running businesses from their home. Those smaller business owners, they find out, I only had liability. I was only prepared for protecting myself, not for protecting our inventory. Another thing we're finding out is that some companies that were operating in an area, in a commercial aspect with a lot of inventory that lacked a perpetual inventory system, didn't know exactly what they had at the time of the fire. And they're really at a disadvantage because they need to now recreate their inventory for the past year or so and kind of use balance forwarding accountings. And hopefully, they were ready for tax season and they were somehow able to preserve that information, because they find out, I don't know exactly what I had. And how do I prove to an insurance company that I had certain inventory if they ask me for invoices and other documents that I might not have anymore. And then you have to recreate that. You have to recreate that inventory. For homeowners, it's a little bit different. A lot of people are finding out they may have lacked code upgrade coverage, for example. So they're only going to get paid the actual cash value of their home and not for actually replacement cost value of their home.
Oh gosh, yeah. Thank you for bringing that up. And one thing I think we're going to hear as we keep moving forward is we need to be more prepared than maybe we thought we needed to be. And so, Kirk, beyond the immediate recovery and looking long term, what impact do you see these wildfires having on the banking industry's approach to risk management and lending?
Yeah, I mean, this is really an important concept here because just a few years ago, we all saw Paradise in Northern California be completely destroyed. And Paradise is in a fairly remote area or a very rural area. These fires happen within, just on the adjacent to the urban core. Some people forget that there was also a fire that started in Hollywood. And if that fire hadn't been put out, there could have been even more disasters. So, I think that what we really need to be looking at is with climate change here, these events might happen more frequently. And so homeowners and business owners need to assess what their needs are and what their situation is and determine their readiness for that sort of thing, both physically and financially. Derek just spoke well about you need to understand what your insurance is. How is that going to change in the financing landscape on commercial side? Banks typically will look at the structural soundness of a building for earthquake issues. I foresee that there may be that sort of assessment related to where something is located, what sort of vegetation is nearby, what else is nearby that might cause a heightened fire risk in that area. So I expect that there will be changes as people start looking at financing, and there will be likely a fire assessment.
Thank you. And Jeannie, speaking of changes, what adjustments to coverage should business expect when we're looking forward?
So I definitely echo what Kirk is saying. So a lot of our insurance companies, as we started into this harder market in California, a lot of the insurance companies for the last 4 to 5 years have been looking at the values and increasing those values on our businesses, our commercial properties, and looking at the fire scores, where they are, how the properties are maintained. Are you up in the mountains? In addition to, where the wildfires are. But I think we're going to see that continue, and we are going to continue to see rates going up, or, sometimes a business owner has multiple locations and they've already been doing this. They may like 3 of the 4 locations, but not like the 4th one because it's in a higher brush area. And they may say, we'll take 3 of the 4, go find another insurance company for that, which then makes it more challenging that we have to go to these markets that are more expensive. In addition, we're seeing the commercial property markets ask for higher deductibles to take some of that risk off of them and put it back on the business owner. So we were already in a really tough marketplace in California for property. I think this is just going to add to that. And it's, it's still very much unknown, but we will continue to see, I think, property rates, go up across the board and again, on the commercial side, is what we're talking about for our business owners.
And piggybacking off that, it is no secret that the premiums and the underwriting standards are shifting in these high risk areas. So, Derek, how have these claims impacted availability and affordability for businesses?
California's insurance market has been in a crisis for about a decade now. We really saw the problem start back in the wildfires that we had around 2016, 2017 in Northern California. And it really has a trickle down impact across all lines. Mostly on that we're seeing it starting with, the main attention, of course, goes to residential, but we're going to see increases on prices across all lines right now, and it doesn't matter. And Jeannie's right. Hey, maybe a company that has a blanket policy does not like 3 of your 4 properties. Are you going to change all of your business and move to another carrier that will provide coverage for that at probably a higher rate? And that was kind of the same shift we saw with people that were getting non-renewed by some of the big box carriers, the State Farm, Farmers, that were not totally pulling out of California, but were making it a lot more expensive for people to write here if they're going to write in their area at all, and forcing people to use some non-traditional carriers, which comes with a whole bucket of different issues because you don't know exactly what those non-admitted California carriers are going to cover when you have a loss. Most people are looking for that liability coverage, which for depending on your business can have variable costs that change over the years, but you're going to see just people have to be more creative in finding coverage. But across the board, it's going to be more expensive no matter what.
Yeah, Derek, I'm feeling that personally. I live in an area adjacent to a fire area, and 2 years, well, it's been difficult to get insurance the last 10 years, and we were with a national insurance firm. 2 years ago, they canceled us. We could not find insurance. We went to a non-traditional insurance carrier, and it ended up at least more than doubling our premium. And then they just sent us another renewal recently, and it almost doubled again. And so it was, and the terms that they were requiring us to make updates to our home were really, in our mind, it was an excuse to cancel us even further because they were I shouldn't say it. They were absurd as to what they were asking. So So we have gone now to the California Fair Plan, and we're banking on the full faith and credit of California to make us to pay the claim if that's appropriate. If it's going to.
It's part of the crisis we have, and I think you're going to see a lot more a la carte insurance. In my opinion, Fair Plan is not, it's an association, and it's funded in different ways. Fair Plan is a solvent association. They recently did an assessment to all the members, which are the admitted carriers in California, to help pay their reinsurance deductible. So now they have enough money to pay all their claims. So they're in a good spot to pay claims. But of course, their premiums are 3 to 4 times higher than your normal carrier, and it only really covers, for the most part, fire and lightning, which is what the minimum amount of coverage you can provide in California is on any insurance policy. That's the only thing you really have. But what's tricky to people is, hey, I also need coverage for other types of losses. I need coverage for vandalism. I need coverage for theft. I need coverage for water loss and damage, given the aging infrastructure we have. And those are where it's a lot more expensive, and you have what's known as a difference in conditions policy. And people think, oh, I'm covered by State Farm for everything. Well, no, you have difference in conditions policy, but you still need the Fair Plan. And when you combine the prices of the two of those at a residential level, you're looking at probably 5 to 6 times what you were paying just 2 years ago. And the insurance companies really use those requirements to change your property. They use them as a protective safeguard in a way. If you are not going to make those changes to your property, you're definitely someone that we don't want to insure. They are not someone that's going to repair their property after a loss. So they can kind of vet out certain people, certain insureds by their property alone, just based on the age of your home. If you're like, I'm not going to replace my roof is 10 years old. Well, guess what? We're not insuring you until you put a brand new roof on. And you're saying, that's crazy. Why would I put a brand new roof on? I have a brand new roof. And so that's kind of what you're seeing in other states as well. And that's kind of why we're in this crisis. We're going to see these problems where you can't get coverage for your roof alone, like you can in Florida. You can basically buy a policy, but your roof is not covered. Everything else is covered, but not your roof. And so I think we're going to kind of see that in California across all lines, in terms of picking and choosing what's covered on a building or not.
And we're seeing that, like you said, in the commercial market too, where the carriers are saying, we don't want buildings, this age, or we want to make sure it's sprinklered if it's not. we won't insure it. And that's been our challenge even prior to the wildfires of finding adequate coverage. And then sometimes even for commercial buildings going to the fair plan. So it's been a challenge. This unfortunately has just made it even tougher for whether it's a homeowner or business owner in California.
Great points. And it seems like there's a lot still up in the air, but business owners still want to be proactive. And so, Kirk, what is something leaders can do today, both structurally and financially, to better withstand and recover from future disasters or wildfires?
Well, it kind of goes back to my prior comments, is that business owners really need to assess their readiness. When these things happen, there's really no sort of an advance warning. It's going to be immediate. And so I really believe that they need to prepare for emergency. It's just the standard business practice. You need to have alternative plans. If there's business interruption, you need to be able to look and see, are you and your employees going to be able to work from home? Are you going to have alternative locations where you're going to effectuate your business? So I think it really is being prepared for the worst and hoping for the best.
And when it comes to filing claims, this question is going to be for both Jeannie and Derek. The process can be overwhelming. So what are some of the biggest challenges businesses face, and how can they assure a smoother process moving forward? Jeannie, let's start with you.
I would say, first of all, for the groups that I work with who have been affected by the fires, the businesses, the adjusters have been really responsive. I think number one, making sure that you can document, it can just be written down of, what has been affected within the building. You take note of inventory, and then pull whatever records you can, do what you can, and then make sure that you have an open line of communication with the adjuster, that if you're not able to be at the office, obviously, because you can't get into the office, give them your cell phone, email, what's the best way to communicate with you, and then keep your broker in the loop. Because once that claim starts, sometimes we are not in the loop to know what's happening. So that if there seems to be a little bit of lag, miscommunication, there's something that the business owner doesn't understand, let us jump in and help with that. Or again, if there's something that you feel should be covered that isn't, let us go in and advocate for you and see if we can figure out a kind of a loophole, a gray area where that coverage could get picked up, especially when it comes to business interruption.
Great. And Derek?
Yeah, no, there's a lot of things that I think that people and businesses can do to help themselves with their own claims. One, being prepared, knowing what to expect in the claim situation. It's different for residential and commercial. Again, for a residential is kind of understanding what they're covered for. A lot of the shock comes when people find out, I was not covered for my jewelry. I was not covered for collections that I have in my home. I was not covered for certain items that have really small sublimits under their policies. So you're thinking, I have a watch and it's, $15,000 watch. Well, I'm only covered for $1,000. So yeah, I was covered, but I wasn't covered properly. And so I think that's really going to encourage people to kind of understand that insurance is not a commodity. You can't shop by price. And unfortunately, the way that insurance is advertised to people is that it is a commodity, and that you can just go around looking for the lowest price for you, which works for some people. It really does. But most people should understand exactly what they are buying. Otherwise, they're going to end up in this situation where we're finding our people are massively underinsured, where they don't have enough coverage under their policy. And, again, going back to kind of California Fair Plan has limits. For residential, they have a $3 million limit, and a commercial policy, they have a $20 million limit. So you can have some insurance, but you might not be insured enough. And that's what we're seeing a lot of problems. I'm hearing from a lot of clients and people that they didn't have enough coverage and they don't know why, or they were only covered for their building and not their contents. So they're kind of in a spot of, I don't even have coverage to go rent somewhere else right now. So, really it's about being prepared, understand again, the businesses that have that have high inventory, but they lack perpetual inventory system really need to be prepared for loss. Backups to backups, cloud-based inventory, making sure that they are working with their accountants so they can recreate their financial history. And I really think that'll help people in knowing what they need from their insurance rather than, thinking that they can shop by price.
And to your point, working together is really how we're going to rebuild getting through this. And so, Kirk, community-based efforts play a huge role into this. Can you share some corporate responsibility initiatives that your bank has undertaken to support the affected areas?
Sure. A couple of things in that is that the Cathay Bank Foundation, the board of directors, and team members as well within the bank, we've raised over $600,000 to directly support essential nonprofit organizations that are providing emergency aid, they're providing shelter and resources to the impacted communities. We've provided those funds to various nonprofit organizations that help in all aspects of that. And, the one thing that we have seen, and in my own personal life as well, I've seen a lot of people, just an outpouring of support for those that have been affected. And, frankly, I really appreciate those nonprofits and religious organizations that have stepped up to help people that are in need.
Absolutely. And thank you for all that you and Cathay Bank are doing. This final question is for the group. If you could give businesses one critical piece of advice to help them prepare for future disasters, what would it be? Jeannie, let's start with you.
Have a disaster recovery plan in place. A lot of times we talk to businesses and they say, we'd like help with that. And that's something as a broker that we, can give some guidance on, but it always gets put to the back burner. And so for those groups who put it to the back burner, reach out and we'll help with that. But we need to actually put it in place, not just have a plan. Can we have employees work remote? Like, how are we going to manage all aspects of the business? Do we have a backup location? Would backup generators work? What do we do in the event of any natural disaster? It doesn't have to be wildfires. It could be an earthquake, something else. So plan for the unexpected so that you don't have to rely on the insurance as much and that you are mitigating as much, changes, harm to the business as you can.
Derek.
Jeannie kind of covered it all. Make sure that, in doing your planning for disaster, that you also budget for the appropriate insurance that you need, because it's going to go up. And not only that, anticipate there's going to be changes to the insurance market that will impact your ability to get the coverage that your business needs. And of course, ask questions of your brokers or agents or producers to find out exactly what you have. The obligation is always going to be on, as we shift from obligation from public entity and government to the individual on all aspects. It's really the obligation is going to be on the individual and business owner to make sure they're getting the coverage they need. That blame can't be shifted to a third party when you find out you don't have the proper insurance.
And Kirk.
No, I think that Derek and Jeannie hit it right on the head. First off, you need to be able to have a plan to recover from the disaster, that you have those contingencies in place so you know where you're going to work, how you're going to work. And then also making sure that you're going to be adequately insured, that there may be a gap. And if there is a gap in your insurance, you need to be able to cover that. And so you'll be able to put your business back on its footing. For individuals that are out there, you need to have a plan. There are great resources to be able to have your own personal plans for your family, who you contact, having a list of everything that you have in your house, emergency contact numbers. Where are you going to go if there is a disaster? These things, unfortunately, are a part of life. Living here in Southern California, along with earthquakes and other disasters, be prepared. And if you are prepared, you're not going to be having the fear that a lot of people experience. So I recommend everyone to have a plan.
As we wrap up this conversation, one thing is clear. Recovery is a long road, but the right knowledge and preparation, businesses can rebuild stronger and more resilient than before. Each of you shared such valuable insights today. Thank you so much, from understanding insurance coverage, leveraging financial resources, or taking proactive steps to safeguard against future disasters. The challenges are there, but so are the solutions for those who take action. A huge thank you to each of you, Derek, Jeannie, Kirk, for sharing your expertise and for being a part of this essential conversation. And thank you all for listening. Please stay safe, stay prepared, and thank you for joining us today. We look forward to hosting you next time.